All right. Hola guys, ¿qué paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. There's been some things going on with Bitcoin, right? Yeah, it's we had a nice bleed out yesterday. The Fed made their lovely announcement about it being unable to own Bitcoin or something like that, and that caused a freak out. All these things are manufactured. I hope you know that by now. It just surprises me that there are some that have been trading, that have been in the markets for years and years and years, and still they don't understand market psychology. Now, every bull cycle in Bitcoin has, at this period of time, where we're at the top, we're peaking out on a 5 Elliot wave. There needs to be a catalyst. There needs to be something, whether it be like a pandemic, or whether it be like a war, or whether it be like riots, or in this case, negative news sentiment through the Federal Reserve. There needs to be a catalyst that can effectuate a sell-off on the macro. I'm not talking about micro waves. I'm talking about macro waves like we see here. And just to show you, here we have the 2021 bull market. This is the macro Elliott wave, the 1 through 5 Elliott wave that ended on a 5 wave in April of 21. And here we are now at this present market in 2024, on the cusp of 2025, where it looks to be also at a five wave. We have similar ending diagonals, and in a rising wedge, which I contend is a four wave in a 5 macro Elliott impulse. So and now here we are at the top of this rising wedge, and now we need to embark upon what's called an ABC correction. But the ABC correction needs to be on the macro. We're not talking about a micro ABC. This is a macro ABC, which facilitates the retesting of the lows of this diagonal. So normally, Bitcoin or any stock or commodity, when it reaches the 5, it has the ABC correction on the macro, and the price comes down, or at least the B wave takes us down to where the beginning of the 4, where the 4 started. So we have the 1, the 2, the 3, and the 4. Now, 4s are usually the geometric shapes that we see, like the triangles or the bull flags, or in this case, rising wedges. Most in the macro waves, they're usually rising wedges, and that's what forms the top, or the macro edge of the distribution range, which would be all this up here, the distribution or the top. And all rising wedges are crooked tops. And so we know that the 5 waves are usually what's called the UTAD in the Wyckoff. Those who know Wyckoff know that the UTAD is the upthrust after distribution. And then from here, we have the mark down. Instead of the mark up, we have the mark down on the macro, where it goes through the range and it goes through the trading range support. And it usually retests, like if we call the 4 wave, if this is the buying climax, then this is the automatic reaction or response. And so it's going to go back down and test the automatic response point. So, which in this case would be $91,000. And then normally what it does is it'll go through this, and if it is a macro sell-off, it'll go through the support line, which is now resistance actually, and go even further down to the prior signs of weakness points. And in this case, the 40, which would be the beginning of the PSY area, which is 85,000, which is what we talked about in a couple videos ago, where we hypothesized that if this continues to play out, which it has been, then we could look reasonably to that area as a potential bottom, and then from there we can we can accumulate, have a brand new accumulation range where Bitcoin prepares to put another leg up. And so if we play the old 2021 bull market bars and see what happened here, we could do that. Let's see if this will work. Okay, I have it on the 3. So see, we were consolidated, and yeah, see, we had the markdown from here. Notice how it mitigated the, remember the AR point? That's exactly what it did here with the AR. And comes back up, retests, makes another attempt, but it fails on the macro trend support. See the mitigation here with 4. And how it fails to come back into the wedge, and then we have it retests the 4. We have a triple, and it goes through, and then it comes back down to this area here, the 2. So these are liquidity voids that are being mitigated on the low side, on the downside. And then from here, see, this will be the selling climax here, which is the macro mitigation of the PSY. And then from here, we start a whole new accumulation range, or a bottom. AR, here's the ST. Now, there was a good chance that this was a bottom because the spread is really tight. So it's not looking like this is a redistribution. This is looking like an accumulation, like perhaps it's going to pump up again from here. Now, I'm not saying that 2024 is going to play out like this, but there are similarities. And then we go down deeper, and this is a spring. See, in foresight, we already know how this plays out because we know that we had another macro pump after this. We didn't go back. This wasn't a redistribution. It was a proper accumulation. It was a bottom. And then it embarked upon a whole new macro pump. And so this started in May, and here we are in July. So 2 months worth of bottom consolidation. A sign of weakness. It's keeping a good floor here. These are what we look for. Now, if this was a redistribution, we would see the waves expanding usually towards the ending of this range, but instead we have a very tight consolidation in the waves here. Normally they'll be really, because you'll have a lot of buying and selling. And then here we have, came back up, showing a sign of strength. We have a triple mitigation along the AR point, a retest. We have predominance of demand in the vertical bar volume, and it's off again. And now we're going interstellar. And here it's looking at least to close out this liquidity void now. So if you had bought in at this breakout, you would set your profit target at this liquidity void area at the 58,000, and that would have netted you about 40, conservatively about 40%. And so I think we're going to see something similar this time around. I think we need to have a bleed out from here. And I mean, that's what this rising wedge is. I mean, I'll be really surprised if after all this we put up another leg and we go, and then we have another reaccumulation range somewhere up around 120,000, 130,000. It's possible because it's Bitcoin, and anything is possible with Bitcoin. I mean, it's really hard to I don't even try to predict anything. This is just a bias that I have according to historical price patterns and technical indicators, pattern recognition, wave count, and all that. But in the end, I mean, Bitcoin's going to do what it's going to do. But usually, what it does, whatever it does, it remains within the governance of the Elliott waves and the known Wyckoff schematics, which it's been following since 2013. It's been within the governance of the Wyckoff schematics and Elliott wave theory. So there's no reason why I would break it now, even though there's more money in it. There's more, there's institutional adoption is much higher, but we see that it's still highly manipulated by news forecasts and sentiments and stuff, and can be used as a catalyst in the hands of the institutional informed interest composite operators. So that's good news for us, because that means that it can still be somewhat prognosticated through technical analysis, through traditional technical analysis, like Elliott wave. You can count the waves, you see it forming the waves, and like the Wyckoff schematics and the different events and features of the accumulation and distribution ranges. So anyway, let's see what it does here. We see that volume is coming in, supply volume. We had a very, very large supply spike here, but it kept it within the framework of the rising wedge. And if we go back here, let's stop this, and we go back and see how this played out. It came down to the automatic rally point, like we talked about in 4, but it came right back up, and so we had this inverted head and shoulders. But then it ultimately failed the retest to penetrate the micro trend, or we'll call this macro trend at this point, support, to get back into the wedge and put up another. Had it prevailed through this wedge support line, then we would be more of we would have more of a bullish bias and be looking to long. But since it failed, and it failed with supply predominance, I mean, look at this spike here, this volume spike in supply. That was the harbinger of a bearish sell-off, which it did on a macro. And that's kind of what I'll be looking for here. Even if we go through and we have another say like another micro pump, I'm not longing until we retest this area here, this support line with demand predominance, and then perhaps it'll be an anomaly. But then I'll I don't even think even then I'll long, because at that point we'll be so severely overbought that it would just be downright frightening for me to even try to impulse swing any of these movements up here. But certainly if we come down and we begin to form what looks like an inverted head and shoulders, and then this last shoulder comes up and fails to prevail through the macro trend support line, then for sure we can count on the price revisiting 90,000, and then upon failing there, going down to the bottom of the PSY area, which would be 85,000, and then reconsolidating along that line. And at that point, we can expect the alts to just explode. So anyway, that's my short to midterm look at Bitcoin. Hopefully you got something out of this. I could be wrong. This is not financial advice. This is just wave theory and historical price action, and just trying to figure out what's going on in the midst of this turbulence, and just with the news and the presidential elections, and the Trump administration being positive with Bitcoin, yet the Federal Reserve pushing back on it. There's just a lot at play here, and it's really, it's a game. If this is your first time in crypto and you're getting overwhelmed, I'm just, welcome to the game. This is the game, and we just have to. There's an entity out there called the market maker, and they're not your friends, and so they're going to use everything they can to transfer your money into their account. of what you have in Bitcoin. And that's why you don't just see Bitcoin pumping to the moon. That's why there's manufactured events like the Fed. Think about it. Powell could have easily just been in solidarity with Trump, and Bitcoin would have gone to the moon, would have put up another leg. But that's not what happened. And some people get angry, and it's like, well, why didn't it happen? Doesn't everyone want to get rich? Doesn't everyone want to get? That's not how it works. That's not how the game works. And so, if you're going to be in this game, you need to learn the market psychology, which is contrary to emotion. It's like, you have the inverted head and shoulders. Market psychology is the inversion of your natural emotional makeup of good and bad. So like, Bitcoin pump, good. Bitcoin dump, bad. No, it's actually Bitcoin pump, danger. Bitcoin dump, good, because now we could buy cheap Bitcoin and enter in and plant the seeds for the future harvest. That's where you make your money. So they're not going to pump Bitcoin to make everyone rich. That's not they don't want to make you rich. They want your money. They want you to sell overpriced Bitcoin, and then once you've capitulated your bags, then they're going to pump Bitcoin, and you're going to chase them to buy it back in. And then the same thing is going to be repeated over and over and over again as Bitcoin steadily rises algorithmically on its pattern up towards what I believe one day it will be. One Bitcoin will be worth at least $500,000, possibly $1 million. But that's not going to happen overnight, and certainly not with the average Joe holding tons of Bitcoin on their ledger or any other altcoin. Same thing with the alts. So take that into consideration. Know that there's an entity that is diametrically opposed to you prospering and wants to do nothing more than to see you bleed out. And they're like vampires. They want to take, you bleed, they want to suck your blood, and the blood is your money. So yeah, you're going to see bleed outs like this. But that's when Elliot wave and Wyckoff and Fibonacci and volume spread analysis are your friends, because they can kind of protect you from the institutional parasites, so to speak. So anyway, if you got anything out of this video, like, subscribe. I'd appreciate it. It'll help other traders learn this stuff and just get exposed to this sort of thing. And if it's helping you, I'd appreciate that. And so would others. So anyway, I'm going to go now and drink more coffee, and I'll talk to you guys later. And be safe. Not financial advice. Talk to you soon. Adios, amigos. Bye-bye.